Hey, welcome back to YT Finance, and today we are talking about Sofi Technologies SOFI stock and 3 other stocks that can 10x in price. We will be discussing these stocks' future outlooks, their total addressable markets, and how long it could take them to 10x respectively. We will also perform some Sofi stock analysis, we will address some Sofi stock news, and we will go over my personal thoughts and experiences with Sofi Technologies. Go and press the like button right now for more stock market news updates. Comment down below your thoughts on Sofi stock, turn on all subscription notifications to stay informed, and now let's get right into today's stories. For a company to 10x in value, a few things need to be in place. First off, the company needs an innovative, differentiated, revolutionary, or disruptive type of technology, or at least a product or service that they can better market to customers better than their competitors. Secondly, this company needs a large addressable market which will allow the company to scale and grow. Then lastly, the company needs to provide customers value, thereby making their customers very happy. The first company on our list meets these criteria with flying colors, and it's named PubMatic, ticker symbol PUBM. PubMatic uses its artificial intelligence-based bidding system to locate the best advertisers for its publishers, which will allow said publishers to stretch their dollars farther by promoting to customers that will actually buy or purchase their product or service. Customers who spent $100 at minimum last year are now paying over $150, which has helped PubMatic grow their revenues by over 88% to $50 million for only a single quarter. However, PubMatic uses internet cookies to track user preferences. For instance, if you didn't know, cookies give ad companies information on customers which allow them to be shown more accurate advertisements. So PubMatic uses this information to their advantage, but their AI is so smart that even without many cookies, it can give relevant ads to customers. Currently, PubMatic is trading at only 8 times sales, and it only has around a $2 billion market cap, but it's set to have a projected $526 billion addressable market in 2024, which leaves a massive growth potential and opportunities for this company. Next up, we have Latch, ticker symbol LTCH. This company creates electronic locks that can be accessed, controlled, and monitored through your smartphone. This has given real estate owners peace of mind, and customers are so happy with both the hardware and software of this product that it has not lost a single customer since 2017, according to this article. I should also mention that Latch is normally used for large apartment complexes or serial real estate owners who agree to install Latch before their structures are even built. So Latch has a load of backlogged work, which is great news. In quarter 2, their revenues were $96 million, and they are booked to install their locks in over 450,000 units. The funny thing is that the company actually loses money on their locks, but makes up the revenue through their software service that controls the locks, because it's a subscription-based software service that customers pay for periodically, which makes up a lot of their revenues. Latch is actually being used in 3 out of 10 all new apartment buildings that are being constructed in the United States, and with this rapid adoption will come greater revenues. This company also has a huge addressable market of $90 billion, which they are set to gain a very large market share of, and the company right now is only worth around $1.2 billion, so it has huge growth opportunities ahead of it. Next, we have Upstart Holdings, ticker symbol UPST, which is disrupting the loan industry because they do not follow traditional means of evaluating if someone can get a loan or not. For example, banks can use up to 30 variables to determine if someone is eligible for a loan, which disqualifies many borrowers. However, 80% of Americans have never defaulted on a loan, so Upstart uses AI and artificial intelligence technology to determine who can afford a loan and who cannot. This gives customers low interest rates, it steals customers away from unfair traditional banking requirements for loans, and it brings Upstart revenues. And as Upstart collects more data for its AI system by issuing more loans, the better the AI will be at giving out loans, thus giving customers even better rates and experiences. Upstart is a rapidly growing company right now, and it brought in revenues for the quarter of around $194 million on top of posting a profit of $37 million. They are also entering and giving out auto loans, and it will look to pursue credit cards, student loans, and mortgages, which will give them a total addressable market of $4.2 trillion, which is huge potential for only around a $20 billion company. Next, we have Sofi Technologies stock, ticker symbol SOFI. Sofi is a fintech company that is similar to Upstart. However, Sofi is the one-stop shop for basically all things finance and loans related. It does student loans, mortgages, credit cards, brokerage services like Robinhood, third-party insurance, along with other financial services. Thanks to Sofi's acquisition of Galileo, which was huge, the company can also issue digital debit cards, deposit accounts, and payment processing. Sofi's customer base has also increased for 8 quarters in a row, and it posted revenues of $231 million, so the company is scaling very nicely. The total addressable market for Sofi is around $2 trillion, and currently it is worth around $18 billion, so to become a $180 billion company is definitely in the cards. Sofi also has recently added 377,000 new members to its platform, which equates to a 96% year-over-year growth rate. A Jefferies analyst even said that Sofi stock is a buy right now, and he also upgraded his Sofi stock price prediction from $24 to $26 after their quarter 3 earnings report. The earnings report showed that Sofi had adjusted revenues of $277 million, which is an increase of 27% year over year and 16.9% quarter over quarter. Sofi also reported that they had 2.937 million customers, which represents a 96% increase since last year, and this also represents a 14.7% increase quarter over quarter. The main revenue maker for Sofi right now is their lending platform, which equated to around 77% of their revenues, and this has grown by a solid 30% year over year. Analysts currently have a stock price prediction for Sofi stock at $25.58. However, on the high end, we have an analyst price target of $30, and on the low end, we have a low-end price target of $16.50, with 5 analysts saying that the stock is a buy and 1 analyst saying it's a hold, while no analysts that were surveyed said to sell the stock. Now, I have been a fan of Sofi since it hit the market because I think this company could become a financial giant because they literally have their finger in everything financial. Even Jim Cramer from CNBC's Mad Money likes the company, and once Sofi has a bank charter, the stock could surge in price because this will unlock many opportunities for the company. But with that being said, until Sofi has all of their ducks in a row and has the bank charter, they are going to lose money. However, according to their earnings report, Sofi crushed expectations, specifically in their EPS, because analysts thought they were going to lose 17 cents a share, but in reality they only lost 5 cents per share. Currently, the fair value of Sofi stock is worth $22 according to Morningstar analysts, so if you own Sofi stock below $22, you are in a fantastic position to either hold or trade the stock very successfully. With that being said, Sofi does trade pretty expensively because they're trading at 20 times their future revenues, and the company is only worth $18 billion. Sofi also has many ETFs to their name, which you can buy right now, such as their Gig Economy ETF, ticker symbol GIGE, but they do have large expense ratios compared to some other ETFs. Now, this can be good news because companies like BlackRock and even Cathie Wood's ARK funds and ARK Invest make loads of money from issuing ETFs with decently high expense ratios. Sofi also sells cryptocurrencies like Coinbase, and they also have their own brokerage that competes with Robinhood, where you can buy and sell shares. So if we can put insurance, investments, crypto, loans, banking, and wholesaling all into one company, it would be Sofi. The problem is that investors need to be patient with Sofi and not expect huge gains right away. The company needs time to find their place among their many competitors in a plethora of services and products that they offer, and once Sofi does this and they get a hold of their market share, it's going to be off to the races because that's when the stock price is truly going to gain momentum. As far as my personal thoughts go, I really like the company and I do own some shares, but what I did not like is when I personally went to refinance my student loans with Sofi Technologies so I could take advantage of the low interest rates right now, I did not like the interest rate that they gave me, and the rates were much too high and not impressive compared to some of the other companies that I compared them to. So in the end, I ended up not refinancing my loans to them or through them for my business degree. But what do you all think? Comment your thoughts down below, like this video right now, subscribe if you are new, and I will see you in the next YT video.